A very good day to Doctor and everyone. We are Group 2 and today the industry we want to present is construction industry. Today we are going to present about the comparison and analysis which is the best company to invest between these 5 companies. This is our group members with 5 different construction company in Malaysia. Now I will pass to the next presenter.
Hello, my name is Zhang Yutian. My metric number is 290531. Now I want to talk about the background of Sunway Construction Group PhD. Sunway Construction Group PhD established in 1981. It is a part of Sunway Group. It's Malaysia's leading vertically integrated construction company. Sunway Construction is renowned for its expertise in several fields, including building construction, infrastructure. In 2015, Sunway Construction Group PhD was listed on Bursa Malaysia. Since then, the company has delivered a lot of projects, such as MRT system, LRT expansions, and the development of Sunway City and KLCC. The company is renowned for its innovative approach, embracing green building technologies, BIM, and sustainable practice. While primarily operating in Malaysia, Sunway Construction Group PhD has extended its presence to markets such as Singapore, India, and Vietnam.
My name is Tong Keng Leong and my matrix number is 297981. The company I choose is Gamuda Berhad. Gamuda Berhad is a global engineering property and infrastructure company based in Malaysia. It is established in 1976. Gamuda operates in 9 countries. Gamuda's business diversification around the global leverage on its capability in railways, metro systems, tunneling, roads, bridge, dams, water treatment plants, airport, urban regeneration and rehabilitation, marine works, townships, high-rise buildings, and digital IBS.
Hi everyone, my name is Kok Lei and my metric number is 299452. So now I'm going to introduce the company background. The IJN Corporation Berhad was formed in 1983 as a result of the merger between the IBG Construction, Juru Utama and Muda Jaya. It conducts its businesses focusing on the construction, property development, infrastructure, plantation, manufacturing and quarrying. The company has operation in more than 10 countries including the Malaysia, India, UAE, China and Indonesia. A member of Bursa Malaysia since 1986, it is also known for its effort towards the sustainability, focusing on green initiative and corporate social responsibility in its operation.
Now I will briefly explain about the company background for Mohiba Engineering Berhad. First, the Mohiba established in 1972, headquartered in Selang, Malaysia, specialization in heavy civil engineering, aerospace, building construction, marine, oil and gas works. It has operation in 5 continents, expanded to Southeast Asia, the Middle East and Africa by the 1980s. Mohiba has over 1,500 skilled professional workforce and listing on the main board of Bursa Malaysia since 1994. Commitment focused on customer satisfaction through the smart objective, delivering innovative, cost-effective and high-tech solutions.
Malaysia Resource Corporation Berhad is a real estate and infrastructure developer founded in 1969. MRCB's core business focus are property development, engineering and constructions, as well as facility management. MRCB's well-known projects include Kuala Lumpur Central, Penang Central, and Sungai Langat flood mitigation. It is listed on Bursa Malaysia as the main market in 1971. Besides that, MRCB is engaged in sustainability, including green construction technology and techniques in its projects.
The next part is retail comparison between companies for year 2023. The first one is the short-term solvency. For this part, we choose the credit ratio and cash ratio. The credit ratio measures a company's ability to pay short-term debits. The IJN Corporation PhD has the highest ratio at 2.47, indicating excellent liquidity. Mohiba Engineering PhD has the lowest ratio at 1.0, just meeting the minimum requirement. The other companies shows moderate performance. Gamuda PhD 1.88, Malaysian Resources Corporation PhD 1.59, Sunway Construction Group PhD 1.32. Next is cash ratio. This ratio assesses how well a company can use its cash to cover short-term debits. The IJN Corporation PhD is again with the highest cash ratio of 0.59, reflecting strong cash reserves. Malaysian Resources Corporation PhD followed with 0.46, showing good performance. Umuda PhD is a moderate at 0.33. Sunway Construction and Mohiba Engineering shows the lowest cash ratio at 0.28. For long-term solvency, we choose the equity multiplier and total debt ratio. The equity multiplier shows the reliance on debt versus equity. The Sunway Construction is 3.46, which is a high debt reliance, high risk. And the other companies has a lower reduce. The Mohiba Engineering and Malaysian Resources is 1.92, IJN Corporation is 1.87, Gamuda PhD is 1.695, which is the most conservative. For total debt ratio, mentions debits as a percentage of assets. The Sunway Construction is 0.354, which is the lowest risk. The Mohiba Engineering and Malaysian Resources is 0.48, which is the highest reliance on debit. Gamuda PhD is 0.41, IJN Corporation is 0.47.
So now I will show a few major comparison in the asset management ratio. For the receivable turnover ratio, which measures how efficiently receivables are collected, Gamuda lead with an impressive ratio of 5.72, indicating the strong efficiency in managing collections. The IGM follow with a moderate performance at 3.62, while Mohiba at 3.10 and the MRCB at 2.29 show the average efficiency. Sunway, however, has the lower ratio of 1.89, reflecting the slower collection cycle and inefficiency in receivable management. In terms of the total asset turnover ratio, which measures how the efficiently a company uses its assets to generate revenues, Sunway stand out with the highest ratio of 0.87, showcasing the excellent asset utilization. Muhiba at 0.36 and Gamuda at 0.35 follow with the moderate performance, while the MRCB at 0.29 and the IGM at 0.22 show the lower efficiency, with the IGM recording the least effective of use of assets. This comparison highlights the varying strengths and the weaknesses in asset management across these companies. So that's all for me. Thank you.
Next, I will be analyzing and comparing between these five construction companies for the year 2023. First, let's take a look at return on asset ROA, starting with Sunway Construction Group Berhad and Gamuda Berhad. Both companies shows the highest ROA at 0.0473. Next, we have MRCB, which falls into the moderate range with an ROA of 0.0114. Last, Mohiba Engineering with an ROA of 0.0105 is just slightly ahead of IJM Corporation Berhad that has the lowest range at 0.0103. Now let's move to the return on equity (ROE) for the year 2023. Starting with Gamuda Berhad, the company leads the highest ROE of 0.234. This indicates the greatest efficiency in utilizing the equity to generate profit. Next, we have Sunway Construction Group Berhad, which follows closely with a ROE of 0.1635. In the moderate range, MRCB has an ROE of 0.0219, performing better than Mohiba Engineering, which has an ROE of 0.0201. Lastly, IJM Corporation Berhad shows the lowest ROE at 0.0193, indicating the least efficient use of equity capital among the company analysts.
Now, I am going to talk about the analysis and comparison of market value ratio for these five companies in the year of 2023. The first one is price earning ratio. The price earning ratio compares the company's stock price to the earning per share. IMG Corporation Berhad has the highest ratio, 27.58 times, which shows that it is overvalued and investors are willing to pay more for the high earning in the future. In contrast, Gamuda Berhad records the lowest PE ratio, which is 5.69 times, shows that it is undervalued and investors expect for better future earning. Moreover, Sunway Construction Berhad, Muhiba Engineering Berhad, and Malaysia Resource Corporation Berhad have similar PE ratios, which are between 15.44 times to 19.67 times. This shows that these three companies have a more moderate and stable earning growth in the future. The next one is price sales ratio. Price sales ratios compares the company's stock's price to the sales generated by the company. Gamuda has the highest ratio, 2.23 times, which indicates the highest sales growth rate and has a strong competitive position among these companies. However, Muhiba has the lowest ratio, 0.45 times, showing that the company has the biggest sales growth rate. Meanwhile, MRCB and Suncon also have low PS ratio, 0.78 times and 0.94 times, just slightly higher than Muhiba. Both companies also shows weak company future growth but still better than Mohiba. Lastly, IMJ's PS ratio is moderate, which is 1.28 times. This shows that IMJ has a stable sales growth rate.
In conclusion, Gamuda Berhad is the best investment choice among the five companies. It has strong profitability, efficient asset management, and undervalued market position. The company ROE ratio at 0.234 is showing the abilities to regenerate high profit from shareholder equity. Besides that, it leads in receivable turnover ratio at 5.72, showing efficient in management of receivable compared to the other companies. Although its liquidity and debt are moderate, but the lower price earning ratio are 5.69 times suggests it is undervalued and making it attractive for investors seeking growth. Overall, Gamuda Berhad combine strong financial performance with significant potential for future earnings, so by investing in Gamuda Berhad will be a good choice among others company.